US stock markets are ready for another robust session. Let's check fresh forecast by our analysts to be well equipped for trading. The US benchmark indexes printed losses on a Thursday. The S&P 500 plunged to the lowest levels in 2 months. Obviously, the US Fed is to blame for the doom and gloom on Wall Street. The Dow Jones shed 0.35% yesterday, and the Nasdaq dropped 1.37%. The S&P 500 sank 0.84% to close at 3,757 points. All three stock indexes traded sluggishly in the New York pre-market, but they went sharply lower in the early trading hours. Futures on the Wall Street indexes suggest another dismal session today. The S&P 500 is expected to print lower lows because the market is braced for the red-hot macroeconomic data and the speech by Jerome Powell. Perhaps investors will be able to find some traces of optimism in a flood of crucial events. The intraday corridor for the S&P is expected between 3,740 and 3,800 points. US stocks again traded under pressure on Thursday, and the major indexes closed with losses for 3 sessions straight. The stock market is still licking wounds inflicted by the Fed's sharp rate hike. Investors found the bad omen in the Fed's outlook signaling a looming recession. Yields of the benchmark 10-year Treasury spiked as investors are getting rid of the assets sensitive to high inflation. Yields climbed 5 basis points to 3.776%, the highest level in 11 years. Yields are on track to close higher for 8 weeks in a row. Aggressive rate hikes in the US cemented the ongoing growth in mortgage rates, which jumped above 6% in early September for the first time since 2008 and have doubled in the last 12 months. On a Thursday, the fixed 30-year mortgage rate rose another 27 basis points from a week ago to 6.29%. This dented sentiment of builders. Apart from the US, interest rates have increased in the UK, Sweden, Switzerland, Norway and some other countries this week. The US Fed's message that high interest rates will remain under 2023 set American and European markets in motion. In this context, Goldman Sachs slashed its forecast for the S&P by 16%, predicting the index at 3,600 at the year end. This mark is 4.2% lower than the current levels, and the index is firmly on the path to this target. Shares of high-tech giants such as Apple, Tesla, Microsoft, Amazon and Meta traded in the red in the pre-market. As for the economic calendar, traders will get to know a batch of the US PMIs. Similar indicators signaled contraction of business activity in the European Union, Germany and the UK. Besides PMIs by S&P Global, investors are anticipating a speech by Jerome Powell that is certainly a high-impact event. In the currency market, the US dollar is developing its amazing rally against major currencies. Its index has conquered another peak today. Shortly after 111.80, the index topped the level of 120 points. 112 points. Having gained 0.78%, the US dollar index was trading at 112.20 at the moment of recording this video. It's likely to trade between 111.60 and 112.70 today. The euro has been extending its weakness for 4 sessions in a row. Germany's PMIs revealed that the economy is losing momentum in September. Indeed, households and the companies are going through a severe energy crisis and soaring inflation. The euro has printed a fresh 10-year low at 0.9736 against the US dollar. It regained its footing afterwards. The pound sterling collapsed yesterday. Earlier sterling-denominated assets had been already feeble. The British pound expanded its slump after the new Chancellor of the Exchequer unveiled a wide range of measures aimed at cutting taxes and utility bills for households and companies. The new government is trying to bolster economic growth, which requires significant borrowings. The yen could not stay afloat on a Friday. The greenback gained 0.4% against the yen to 142.94. And the risky currencies like the Australian and the New Zealand dollars also incurred losses against the greenback. The outlook for the US dollar is clearly bullish because the US Fed is going to outrun its counterparts in the pace of rate hikes. The USD CAD pace is drifting higher, though the loonie had weakened to the lows of the summer 2020. It's showing resilience unlike other major currencies. The currency pace is trading at about 1.3525. Its intraday corridor is defined between 1.3490 and 1.3560. Investors will digest fresh retail sales data for Canada, and retail sales tumbled 2.5% in July from a month ago, worse than the expected 2% fall. It's the first contraction since December 2021 and the steepest decline since April 2021. 9 out of 11 sectors reported a decline in sales. The annual rate of retail sales expanded 8% in July at a slower pace than the upwardly revised increase of 11.1% in June. The flash estimate for August suggests that retail sales in Canada could have grown 0.4% in months. Oil prices are taking another nosedive. Crude oil gets more expensive to buy due to the robust dollar's rally, triggered by the hawkish Fed and demand for safe haven assets. And recent media reports show that the talks on the revival of Iran's nuclear deal have come to a gridlock. Investors are keeping tabs on partial mobilization in Russia that could disrupt global oil supplies. Brent crude sank 4.01% to trade at $86.84 a barrel. And in contrast to the oil market, the crypto market looks better. Digital assets are trading with the same dynamic as the Nasdaq and the S&P500. Bitcoin is eager to settle above $19,000 and Ethereum aims to stay above $1,300. Altcoins are trading mixed today. Bitcoin is expected to trade in the same corridor between $18,200 and $19,600. The market awaits US PMIs and Powell's comments. Wall Street could revise its sentiment following these events. InstaForex analysts wish you profitable trades and see you online next week.